Welcome to the Techno Fundamental Report for July the 18th. We all remember Star Trek. This was Spock mind melding with Captain Kirk. And the point I'm making here is that the market has all the information. One of the things we're taught in business school is the efficient market hypothesis, which we'll talk a little bit more about. But basically, with fundamental analysis, you're evaluating balance sheets, you're investigating income statements and cash flow analysis. But all this information is in the market, especially with the invention of the internet. Information spreads rapidly. Think about the 1920s. They had the printing press, which was basically newspapers. That's how information got disseminated. So as time has gone by, the market has become more efficient. But the main thing that you want to do is allow the market to tell you what's going on versus your ego telling the market what it's going to do. Never confuse your views what is actually happening in the stock market. It's either an uptrend or a downtrend. Now realize big institutional investors, this big footprint is like a big institutional investor. We're talking pension plans, mutual funds, hedge funds. The individual investor is a very small percentage. And so once you start to understand auction markets, now think of a traditional auction market. Take an art auction where you go to the auction, everybody in the room is there to buy. It's not like you have sellers there. The sellers have already left. They've left their merchandise and they're just allowing people to bid on the art. So what happens is you get these buyers and you get sellers. And with the securities markets, it's buyers and sellers. Whereas, when you think of a typical market, when you go to an auction, you're always kind of shocked about how high the prices are. You think you're going to get some kind of deal. But it's because it's not efficient. You've got only buyers in there. So the efficient market hypothesis is basically saying that the market is efficient. We were taught this in business school. It's very controversial. But is the market efficient? I think it is, but not totally efficient. There are some anomalies out there. Now, I wanted to take a minute and talk about Milton Friedman. He is a great economist. He's probably the most common sense economist you could ever listen to. Now, he's very pro-capitalism. And so according to Friedman, the reason for the Great Depression was not caused by private enterprise. Now, this is his opinion, but I believe it. The Great Depression was caused by bank runs. And what happened with the bank runs is that you ended up with a reduction of the money supply, a dramatic reduction of the money supply, which just brought the economy to a screeching halt. And it took years, if not a decades, to recover from this. Well, Friedman points out that it all started out with this bank right here. It's called Bank of the United States. And it was a very popular bank in New York, had very loyal depositors. And it started to have a problem, and there started a run on the bank. And now this was the first one. So the Federal Reserve did not do its job. Its job as a reserve bank was to come in and shore up the Bank of the United States. Once that run hit and that bank went out of business, it was just a commercial bank, but people, also it was kind of false advertising because they called it the Bank of the United States. It was kind of like it was federally insured, but it wasn't. And so if the Fed would have just stepped up and prevented that run, it would have really made a tremendous difference, and we might have just had just a mild recession. But this triggered bank runs across the country, and the rest is history. So the reason I'm bringing this up is we're noticing a very shift in character here of the market itself. We're seeing that the banking stocks, which is important, we've got to keep a strong banking system. Well, this is a graph of the regional banks. Now, we all remember the Silicon Valley Bank episode. The Fed did step in, and they did a good job. Then also on the financial crisis back in '08. So basically, the Federal Reserve learned from 1929, the Great Depression, that the Federal Reserve has to be a reserve bank to shore up troubled banks so they don't get some type of spiraling effect. So what's happening here with the regional banks, they've broken out of a base here for the first time. This looks very positive. So Let's take a look at the market. A lot going on here. Very busy week. You can see here that there's some transition going on. There's something changing here. The NASDAQ had a substantial drop. The technology stocks in general basically pulled back dramatically, where at the same time, the smaller companies, this is the mid caps, you can see here, this is a major move here. So what we're seeing is rotation. It's where what basically has been hot now gets cold, and what's cold gets hot. So it's rotation. So here's the New York Composite, which has a lot of banks in it. You can see here the major breakout of the New York Stock Exchange. Here are the small caps. Now realize the Russell 2000 or the S&P 600, these are both small cap indexes. They're what you call risk-on indexes because most of these companies don't make money. Now there are a lot of financial stocks in small financial stocks, meaning small banks, in these indexes. And again, we're seeing strength in the bank stocks, which is very positive. So in other words, risk on here because people are willing to take the chance of investing in companies that aren't making money today but are projected to. It's kind of a venture capital thought. Now you can see here also with the S&P 500, we're getting this same kind of pullback. So we're seeing the NASDAQ pulling back, the S&P pulling back, but at the same time we're seeing rallies in the mid caps and the small caps. This is rotation. Now the equally weighted index. Now this is where we equally weight the S&P 500. Then if you go on down and look at the small cap advanced decline line, you can see here that the advancers are far outweighing the decliners. Again, this is risk on. This is very positive. Again, here are the new lows on the NASDAQ minus the new highs. Again, I just had to pull this chart in because it's an absolute parabolic move. So it looks bullish. It looks like things are changing, and we've just got to be flexible. Now, here's the value line geometric. Now, this index has basically gone nowhere for 5 years. And all of a sudden, it's breaking out here of a major basing area. And this is 1,700 stocks that are all equally weighted. So you're really getting more of a true picture. It's like you're looking under the hood and you're seeing things that you wouldn't see in things like the Dow Jones or these other indexes. So you need to look at more than one index. Now, the other good news here is we're seeing a downtrend here developing in interest rates. We're down to 4.1% on the 10-year Treasury, whereas back a couple months ago we looked like we were going to 5%. So that's very positive. And the interest rates have dropped below that 200-day moving average. Now, price of oil somewhat stabilizing, not going crazy, which is kind of an indication of inflation. Here are the financial stocks. You can see here, again, we're seeing that uptrend developing above that 200-day moving average. This is very positive. New lows. We're seeing the new lows starting to dry up. Now, we've gotten 4 days here of new lows below 40, which is a positive sign. So the whole idea behind this indicator is to say, maybe the sellers have run out of steam. Maybe we've gotten most of the selling out of the way. That's what the hope is. Now, I did want to show this graph too. This is the Russell 2000, which is small caps, compared to the S&P 500. This has been in a severe downtrend. This is just not sustainable. And so basically what you've seen here, it made basically what I would call a major low in this relative graph. Now, this is relative. This is not the actual index. But you can see here the change in character. There's definitely a change in character going on here. So if you have any questions, please let me know. Thank you very much.